Hello, hello. Welcome to the Solid Report. We are here in a brand new week, a short week, actually, and things weren't looking too great this morning, but we've since then kind of reversed a little bit. Tech is up, TLT is up, we got SPY is up, we got IWM is up. So stocks are looking a lot better than they did this morning. But something kind of shifted the tone because at first software was looking really good and then software pulled back dramatically. And now semiconductors once again are leading the up move here on the S&P 500 along with the Q. So let's go ahead and take a look at one thing I wanted to point out actually. So we have Amazon is actually looking like it wants to crack its major losing streak. Right, so Amazon is basically down. Let's see over here. I want to bring up this one. This is about $450 billion lost in Amazon in the last 10 days. And hopefully they will be able to not close down today. It'll be a dramatic fall in order to close down today in Amazon. But it's basically been down about 10 days in a row, the longest losing streak in history. And the last time this had happened was in 1997, and Amazon bounced about 10%. So we're up about 1% today in Amazon, bouncing pretty decently from the lows of today. I believe, yeah, we were down to 196 on the lows of the day, which would actually put Amazon down here. If we closed over here, went down to the low day, Amazon was down about 1.5%, and now it has recovered since then. And looking like over here, that this was the basically longest losing streak since 1997. I mean, essentially in history. I mean, you haven't had the 11th day. So if it was the 11th day, this would certainly be longer than that previous one. But 10 days is still the longest it's ever had a losing streak. And we look over here, 1 day later, up 2.3%, 2 days, 10%, and 3 months later, up 37%. Can you imagine if Amazon was up 37% in just 3 months? That would literally put the Qs back at all-time highs. Like it'd be very difficult to see that the Qs would not be at all-time highs and Amazon bounces 37%, because 37% would put Amazon like very high up there. Actually, let's go ahead and take a look over here real quick. Stocks by market cap. Let me bring up this tab over here. And if we look over here, Amazon is a $2.159 trillion company. And then if I do a 37%, let's just say 35%. So 2.159 times 1.35, that would put it at almost a $3 trillion company. And then today, that's $201 times 1.35. That would put it at $270 per share, which would be a crazy move for Amazon to have 3 months from now. And you can certainly expect all the other stocks over here to be up significantly higher if Amazon is up 37%. But not every single mega cap today is doing really well. We have TSM actually down is about 32 basis points. You know what? Let me take a look at the real-time trading view over here so we can see what those real-time prices actually are. So my big watch list over here, Apple has been actually up pretty much the whole day, up about 4% today, which is a pretty big move for Apple. It's regaining the 100-day moving average over here. NVIDIA has been just exuberating strength all day, recovering all the moving averages. And of course, we do have the NVIDIA earnings next week on Wednesday, February 25th. I will likely be streaming that one live, give you more details on that one. Meta bounced pretty considerably. It was down to $628. It's bounced back to $641. Arguably, though, it is still down pretty dramatically from its close the day after earnings, down nearly 13%. And I did not think we were going to see these levels again, but here we are, just against all odds. Google is down today, but still the chart is pretty bullish. Short term, it's got us find support at the 100-day moving average over here. On the weekly chart, it is still above the 20-week, and on the monthly chart, it is still very bullish here on Google. The 20 monthly moving average here for Google is at 213, which is a ways far down from here. Amazon, on the other hand, is trading below the 20 on the monthly, right? So we still have a bit of work to do here with Amazon trading at about $201 per share. But arguably, semis are just rallying over here, like just ridiculously. It is just a relentless rally for most semiconductors. Vert is closing in on, I believe, almost a new all-time high, not exactly a new all-time high. Micron is down only 1.6%. SanDisk is down 3.7%. Oh, so TSM actually is red today, but still doing pretty well on the chart. Intel is at $46. AMD was below $200 this morning, has found some recovery since then once the VP has debunked the semi-analysis report that we did see over the weekend. I'll talk a little bit about that one. And we got a few other semiconductors that are up today. One of them is actually reporting today, ACLS, which is something that I have a pretty decent sized position in. I'll talk a little bit more about that one later. And did a cut of the SIMO position today, mostly because I probably should not have gotten into this position, but it's okay. That was only a 3% position. I'll look to get back in later if things do continue, but it was quite extended on the chart, especially the weekly chart that was pretty far extended. I mean, monthly, obviously, you're going to move like that. It's going to be far extended. But the weekly chart was very far extended and got out of that break even, so that wasn't that bad. But yeah, like I mentioned, IGV is down pretty considerably today. We'll get over a little bit of the news with Bill McDermott this morning. But what we did see news recently was that Figma is actually partnering with Anthropic. I do have some coverage in this one, so I'll play this clip for you from CNBC. Let me just grab it here real quick, and then we will watch this together.
Hey, Brian. So this feature, it's called Code to Canvas. It lets users take interfaces built in AI coding tools like Claude Code and convert them into editable designs inside of Figma. Now, this is a bet that in a world where anyone can build software or design something with AI, the real value is in what happens next when teams come together to refine, iterate, decide what is actually worth shipping. So Dylan Field says that is how you actually thrive, not just survive in the agent era.
I also think you shouldn't be sacred about trying to lock your users into one workflow. And that's what the bet is today that we are talking about, is that we're trying to make it so that wherever you start, whether it be a napkin sketch or a shower thought or design canvas or code, you should be able to go anywhere else that you need to go.
Now, this is a bold position for a company that has been caught in the crosshairs of the software sell-off. Figma's stock, it is down sharply since its IPO last summer, along with the rest of the sector, particularly over the last few weeks. So I asked Field how he's talking to other startup founders considering an IPO about that kind of pressure.
No, literally, it's the same as what I tell my employees, which is we control the inputs. Let's show up every day, work as hard as we can to go make it so that we build the right things for our customers, and everything else will take care of itself. I think that other private company CEOs, some have asked. The frequency of people that have asked me about it has gone down, I'll say that.
So fewer CEOs are calling Dylan for IPO advice these days, that is startup CEOs. But he says that he's still glad Figma's a public company, and it pushes him to face disruption like the one we're seeing right now head on. And Brian, it's very interesting. Maybe those private startup CEOs aren't calling him, but you know what? Maybe some more public company CEOs are going to call him, because look at the stock. I can't think of any other reason it's up right now, up more than 4% after announcing this partnership with Anthropic, the very company that is creating this sort of SaaS existential moment.
Figma was the hottest stock in the world for about a hot minute. I mean, its IPO, we couldn't stop watching it go up and up. It's been a tougher run.
So I wanted to bring up something here because this was interesting. I don't know if you guys remember, but there was a point where Adobe wanted to acquire Figma for about $20 billion. And if we take a look at these market caps over here, I'm going to bring it up on the big screen for you guys. All right, so if we take a look at Figma, right now they are at a $11 billion market cap, which again is just crazy because this was like a really hot IPO about a year ago. The high that they had, remember that day, closed like $122, which is up, what is that, like a 6 times from here where it's trading? And that's like about a 6 times. So they're trading at about a $60 billion valuation, which is arguably be very expensive. I did buy Figma at $55 for a trade, but I stopped myself out around like $53, so a small loss over there. But yeah, it's been a massive downturn since then. Of course, this is with the whole SaaS sell-off. People are very much in fear that AI is going to be cannibalizing all of this SaaS moats and SaaS revenue across the corners as companies begin to build their own in-house products and don't need to have as many licenses or seats or a product altogether. And Figma was a little bit of fear with that. Now, the reason why Figma's in fear with that, I'm not exactly sure, because this is more to do with creating images and content or visuals and so on. And it does utilize AI. So they are part of that tailwind. But if you look over here, Figma is worth about $11 billion. Adobe is obviously a lot larger company at $108 billion. The stock is still down at $260. But let's take a look at how much cash they have in their balance sheet. They have about $6.6 billion of cash in the balance sheet. Obviously, they have a lot of debt too. But a company like this probably could offer shares or even borrow money in order to purchase Figma. And that would probably still put the valuation of Adobe in an attractive valuation. If you're a long-term shareholder, I did own Adobe. And I was with you guys when I did sell out of Adobe for a 10% loss. And that's okay. I don't need to catch all the bottoms. But at the same time, I don't want to continue to buy something where it's probably more of a trade than anything. But let's take a look at this. Adobe on a forward gap basis is trading at 15 times, growing at about 10, 11%. But they are a very profitable company. The gross profits are about 90% gross margins. Net income margins about 30%. Free cash flow margins is down here. Wait, where am I looking? Here we go, 37%. And from an operating income, they're at a 36% operating margin. So still, if this is something that you want to sit in for quite a period of time, this might be an attractive asset for you, especially if you're still bullish on Adobe, still bullish on buybacks, the growth, and so on, and its moat in the industry. But, for someone like me, where I'm looking for massively outperforming the indices on a year-to-year basis, this probably is not a best buy and hold for me, as the chart just looks pretty horrendous. But yeah, so that is the thing with Figma partnering with Anthropic. Obviously, we had the news over the weekend where you had Peter Steinberger, who was basically the creator of OpenClaw. And OpenClaw used to be Claudebot, the big thing that initiated the entire software sell-off. And what had happened was that OpenAI did acquire for a $1 billion valuation of OpenClaw. And therefore, now Peter Steinberger is working for Sam Altman or OpenAI. I actually did release a video last weekend regarding Steinberger, how he did discuss his agreement with Sam Altman. So let me just bring this up over here real quick. All right. Oh, hold on a second. I'm just going to share this tab. There you go.
A really cool discussion with Sam Altman. And he's very thoughtful, brilliant, and I like him a lot from the little time I had. Yeah, I mean, I know some people vilify both of those people. I don't think it's fair.
I think no matter what, the stuff you're building and the kind of human you are, doing stuff at scale is kind of awesome. I'm excited.
I am super pumped. And the beauty is if it doesn't work out, I can just do my own thing again. Like I told them, like I don't do this for the money. I don't give a fuck.
Yeah.
I mean, of course, it's a nice compliment, but I want to have fun and have impact. And that's ultimately what made my decision.
So what we have over here is that this isn't for money, right? So Peter Steinberger did start a company many years ago, and he ended up selling for $100 million. So he's obviously not someone who is looking to get rich, because he has his ways of basically gaining a lot of appreciation on him and any of his assets that he creates. And then this guy kind of went off the grid for a minute, went into depression, got like extremely jacked, as you see some pictures online. And then he basically sat in his room and started developing OpenClaw, or at the time it was Claudebot. And it was able to basically run agents locally on a Mac Mini and able to do all these tasks for him that basically outperform a lot of tasks that a lot of these SaaS companies, software companies do produce and sell. And he got a lot of cease and desist letters from Anthropic, specifically because they called it Claudebot. And it wasn't like it wasn't spelled the same as you pronounce Claude, which is the LLM for Anthropic. It was spelled differently, so he ended up changing the name more than a few times and finally came up with OpenClaw. And I think what had happened was that Sam Altman saw this. He knew that he was in competition with Anthropic. He knew that he wanted to basically beat Dario in his own game. So he went ahead and pitched. I'm not really sure how, maybe he convinced Peter Steinberger to join OpenAI and is going to leverage that to build their own AI agents, build basically the open source that OpenClaw was, which is one of the fastest growing repos in GitHub in a very short period of time, which is how it gained such popularity. And Sam Altman is going to leverage that for OpenAI. Now, how is this actually going to pan out? Is OpenAI supposed to regain leverage over Anthropic and Google Gemini? Well, we'll see. That's a story that needs to continue playing out. But as we have seen from all those similar web charts that I've shared many, many times, is that OpenAI is losing market share. And they're losing it mostly to Google Gemini, but also losing it to Anthropic and Grok. So we will continue to see what happens to that one. Obviously, this isn't the end of the game. This isn't the end of the war. They may have lost the battle now, but we'll see if they can actually regain some leadership in that war. So what we got next going on over here is, hold on a second. I want to open this one real quick. Wait, no, that was the Anthropic one that I was going to open that I already had. So I did discuss earlier that, and I did post yesterday, that there was some investigation done and research done by Semi-Analysis, which a lot of you people are very familiar with, and that AMD is actually behind by about 3 to 6 months on their AMD MI455X, which is their competitor to Blackwell. And they weren't expecting those to actually be released until the first quarter or the second quarter of 2027. So what had happened was that the VP in AMD came out and he specifically pointed out that Semi-Analysis research is wrong, that the MI455 is both fast and is the fastest I've seen in execution for bring up of complex GPU platform. MI455 is right on target for shipments in 2H 2026, irrespective of what Semi-Analysis says. So he's specifically calling out their BS, right? That's supposed to be coming in the second half of 2026, so there will not be any delays in that one. This is the original details of what Semi-Analysis said, and the stock was down overnight yesterday, but everything was kind of down overnight, so hard to argue this is the reason why it was down. But Semi-Analysis had said AMD's MI455X rack scale systems isn't landing in volume until 2027, with engineering samplings only showing up in H2 2026. So the question here is who's right? Well, I mean, obviously AMD is not going to sit around and let someone talk all this crap about them. They're going to try to prove it false. But we will see what's actually going to happen. We haven't gotten like an official press release saying that they are on target. We just basically got the VP talking of his game, which kind of makes sense. I'm not shorting AMD. I'm also not bullish AMD. I think there's a lot more upside in certain other parts of the market, in semiconductor specifically. But I would argue that there's a lot of other companies that'll probably have a lot more upside than AMD on its own. Specifically, one of them I've been calling out was ACLS that's reporting earnings today. I'll get a little bit more into that one later on. But we also did get the news that NVIDIA, let's see here. I posted it earlier this morning. Here we go. Oh, wow. Where was it? Oh, here we go. So NVIDIA said it's pushing up the shipment timeline for its new Vera Rubin line by 3 to 6 months, bringing first shipments into Q2 2026. And this is per Evercore, right? So these aren't the actual companies that are saying this stuff, right? Like if they had to say it, they'd have to go through compliance and they'd have to regulate everything. They'd have to put out the press release and all this official stuff. But then you have these research firms or sell-side analyst firms like Evercore basically doing their research and then coming out with their statements and hypothesis and like what's actually going to happen. And they came out and they said that NVIDIA is pushing up their timeline by about 3 to 6 months. We'll see what happens with AMD. Yeah, I mean, it was probably some FUD. You know, maybe they were shorting the stock. Maybe they want it down. And that's to be righteous, to be honest. You know, a lot of these companies have a position in something, and then they release news or they release research and the stock moves down and they cover their position. It's just the nature of the stock market, and that's what happens. Now, when I post this news, I'm just sharing information. So, you know, and I'm citing my sources. So it could be wrong, it could be right, you know, but obviously I wouldn't say the Semi-Analysis is an uncredible source. They usually are pretty good with the research. In fact, they did say that Amazon was going to reaccelerate its AWS segment back to the mid to low 20% range from about 17, 18%. And then here they are as of the last earnings. Amazon is all the way back at about 24% growth rate for AWS. I did have this image from a quarter that I did share with you all. Where did I put it? I must have shared it after. Here we go. So I did have over here Amazon revenue growth by segment. Online stores, 10% year over year, $83 billion. Third-party seller services, $53 billion, 11%. AWS, like I just mentioned, 24% year over year at $36 billion. Advertising, $21 billion, 23% year over year. And advertising and Amazon Web Services are the highest margin businesses within their company. Subscriptions, 14%, physical stores, 5%. They are cutting a lot of their Amazon Fresh stores and so on. Some of them are going to remain open, but they don't want to focus on that one. And others about $1.7 billion, which is probably like Zoox and all these other side businesses they're trying to do, Project Kuiper and all that stuff. So we will continue to monitor that situation regarding that. What's a story with? Yeah, that's pretty much what it was. It was that Amazon was down. If you go back to the beginning of the video, I was talking about how Amazon is going to snap its 10-day losing streak. As far as going down in the stock market, well, actually, let's take a look at what the market's doing right now. I mean, I've been streaming for about 22 minutes, so things can definitely change in a short period of time. We have here that Amazon's up about 1.2%, so that means they're going to snap that losing streak. They were down as much as 1.5% earlier today. Bitcoin has continued to be consolidating over here. Looks like it's not falling off a cliff, but we'll see what happens with that one because we've seen that story play out many times. And Core is down about 1.8%. On Semiconductor is almost flat on the day. Zeta is almost flat in the day, which is good to see. They report earnings, I believe, next week. Hold on. Zeta earnings. Zeta reports earnings. Where's my stuff, guys? Come on. I don't have it here. I'm pretty sure it's next week. Actually, we're going to take a look at that earnings calendar later on. We'll take a look at that one ourselves. But yeah, we'll see. Yeah, they also said that HBM4 is faced significant delays with turn to be false. Yeah, I know. So like these research firms, like you can't take everything they say for fact, right? You need to put together your own thesis and you need to base on whatever research you're doing. You can't just take whatever someone else says as true. You need to do your own due diligence as well and take a look what happens. But yeah, they were clearly wrong with the HBM4. And if anything, they're going to be trying to ramp up those future lines of high bandwidth memory a lot sooner than expected, so they can meet those deadlines. We'll see what happens with that one. Am I in Rocket Lab? I am not in Rocket Lab. What is Rocket Lab doing today? Okay, they're up about 4%. You know, I actually posted this morning that Ondas is up like 7% earlier. Yeah, they're up about 8% today. They did win that contract with the German police force. And they are targeting a much larger TAM, so that could expand their revenue belt if they are able to expand on that TAM. So I did have some small caps I want to look at. Oscar is up about 30 basis points. Grab is up 3.6% today. What is going on here? This is definitely, we need to like fix something going on over here because the market is up, but Grab is up. That makes absolutely no sense. Yeah, thank you. So then Zeta is Tuesday, February 24. I will be streaming that one along with a few other people. So be prepared to tune into that one. ASDS is up about 1.5% today. Duolingo, I mean, this chart's horrendous. I'm staying away from this chart. This is on a do not touch list. HAMS is down again today. Not as crazy. It's down. EOS is up about 2.3% today. ELF is still up in the day, peaking up back above that 20 and 50-day moving average. This is actually might be a little bit of a reversal here since that's 20 days back above the 50-day. That's always a good sign to see. IUNQ is down. The world is healing. Software is just red across the board. You know, I'm actually surprised if Klaviyo is down 6%. You have a few marketing companies that are down as far as software goes. You do see a bounce in Monday.com up about 1.5%. Cloudflare is down about 2%. Paycom is almost at the hundreds. Wow, Paycom goes under $100. That'd be crazy. ServiceTitan is back where its pre-IPO levels were supposed to be. That's very interesting to see. See, Salesforce, that's a crazy move on Salesforce. Salesforce is about to make a new 52-week low close. It has not traded around here since March of 2020. That's insane to think about. Salesforce has done nothing for the last 3 years. I mean, maybe you get the dividends and so on, but you're not buying Salesforce for the dividend. You're buying it for the upside. That's crazy. GitLab continues to just go down. So glad I got out of this one. Palantir is green in the day. Thank goodness. MongoDB is falling off a cliff still. So Snowflake is down 4% today. Palo Alto reports earnings today after close. We're going to talk a little bit about that one. Any prediction for Zeta earnings? I mean, the thing is that, we're probably going to do like a Zeta earnings prediction with the Z Vendors crew. That's myself, Nate, Ronnie Coleman, Ron, Ronnie V, Mr. Zeta himself, Nicholas, and Arya. We're probably going to, and Davis, we're probably going to do like a little bit of an earnings preview for Zeta. So we'll take a look at that one. I'm not going near Oracle. Oracle is not only a horrendous chart, but I don't have access to a Bloomberg terminal, but their CDS spreads, basically the insurance that you have against owning Oracle debt, is pretty nasty. And this thing is like down 56% from its all-time high. So I would be careful trying to buy certain stuff like that when it comes to just falling charts. What do you think of cybersecurity as an investment? I'm bullish cybersecurity, but the software sell-off is just taking its precedence, right? I mean, if you're a long-term shareholder, there's a few cybersecurity companies I would own. I mean, I would be buying Palo Alto, CrowdStrike, or Rubrik. Zscaler is they're not the leader when it comes to network security and SACE modeling. It's more of a secondary leadership to Palo Alto, which is a profitable company. Zscaler is not profitable. Jay Chandri, who's the CEO of that company, continues to pay himself and his entire family a good amount of money. So the SBC is high and it doesn't look like it's dropping anytime soon because, Jay's got to pay himself, right? So I am not a fan of Zscaler for the long-term perspective. Short-term, though, the Zscaler chart always does these crazy moves where it like falls very hard and then bounces. But I mean, you need a material bounce to see some upside here from Zscaler. And arguably, if Zscaler bounces, so will Palo Alto, right? So Palo Alto is trading at the same levels it was trading at last April, and also trading at the same place it was trading in July of 2024. So like I mentioned, Rubrik, Palo Alto, and CrowdStrike, the big money makers in this industry. Rubrik is not profitable, but Palo Alto is profitable, along with CrowdStrike. I don't have a position in eToro. I did see that that was up pretty considerably today. But, I mean, guys, like, why would you chase this? Like, I would not chase this stock. I mean, that is a lot of volume, though. That is a lot of volume. They did report earnings this morning, so that's the reason why they're up a lot. But I mean, if you believe in the story, go ahead. You're going to have a lot of conviction for this one. But, a 20% up day is a lot, but it's dropped insanely since it's IPO'd. It IPO'd, closed here. It's still up, down about 50%. So, like, the chart is just not bullish. I'm sorry. Thoughts of SentinelOne. Honestly, the only play you're looking at with SentinelOne is really just an acquisition, right? You're not gonna get SentinelOne to rally 100%, which is where it was trading at back here, more than back here, right? You need an acquisition. Now, is it going to be an acquisition target? Well, the company is about $4.5 billion. They're not even close to profitability. They're not even getting closer to profitability. You'd have to, if anything, it would probably get acquired and taken private versus like a larger company buying. Like Palo Alto would not buy SentinelOne. They already have their own product, Prism, right? So that's already it's not called Prism. I forget the name of their endpoint security product, but they already have one. So why would they need to acquire SentinelOne, right? And they shot down those rumors a long time ago. And even with like GitLab, right? So GitLab, like you need an acquisition. But how many times has the market been fooled by this acquisition? Over here, it got fooled by it. Over here, it got fooled by it. Over here, it got fooled by it. I mean, if you keep on playing this acquisition game, you have to hold for a long time. And if you hold for a long time, like how much premium are you going to get for that acquisition? Like if you buy GitLab up here after you heard it was being acquired or rumors of it being acquired at $60, you would have basically got your investment cut in half. And if it gets acquired, it's probably going to get acquired at like $40, $42, nothing more than that, right? And we don't even know if that's going to happen. So yeah. No, I don't think I'm going to be joining AMAT stream today. I got some stuff I got to do. Do I own grab stock? I do. I'm a bag holder. I'm a grab bag holder. My average is like 3.85 or something, where it was trading after hours after the earnings the other week. But continuing to be a bag holder, not a major position anymore. I did trim when it was all the way up there, but still a bag holder. So we'll see. Is NVIDIA buy after this dip? What dip? What dip, man? There's no dip. This is consolidation. This is major consolidation. And if you bought over here, that could have been your dip, but like this is a dip. This is not a dip, out of my opinion. But, you know, this is consolidating, and this is probably going to breakout in the up or down direction after earnings. I'm not going to be playing NVIDIA earnings. It can really go up and down. Let's see here. Explain the puts being bought today in NVIDIA. I mean, you know, a lot of, you know, see, the thing is that when you look at order flow, some of this order flow can be a hedge. It could be a long position. It could be part of a spread. So if they're part of a spread, that means someone is buying the puts and then they're shorting puts further out or whatever it is, which means that it's not as naked as you think it is. And maybe some order flow books might be able to show you that they're doing that, but like, you don't know. You don't know if they're easing into position. So we'll see. Yeah, I mean, 210 to 180. I still think there's a lot of upside in other companies. Like on Semiconductor was trading at like $47 when NVIDIA was like 180. NVIDIA is basically flat. On Semiconductor's up like 60% year to date. Axcelis reports earnings today. I mean, that they're very undervalued, right? So it's not obviously not as big as NVIDIA, but you know, I think there's a lot of upside if you do your due diligence research. Just buy cyber. Yeah, you could also buy the ETF and not really have to worry about individual holdings. Gain the upside in that one. So we will see. All right, I wanted to get into some of the ServiceNow bit that we saw this morning, which the stock was up this morning when we did see the news. So if I open this up over here, CEO Bill McDermott purchased $3 million worth of shares, a notable dip buying for a $115 billion company. More importantly, he and both the CFO canceled their planned stock sales. And the market's reaction was up 3.9% pre-market. And since then, it's basically sold off a lot of those pre-market rallies. It's sitting here at down. It's about 1.26%. I mean, it was a lot lower this morning, but since then the market's recovered quite tremendously. So that recovered a little bit with it. But ServiceNow was very green this morning, and it just sold it all off. So what is the bull case for ServiceNow? Now, I don't think there is necessarily a bear case for ServiceNow other than the chart. This is so far the only bear case that I could think of, right? It's a phenomenal company. I used to own this company. Very phenomenal company, right? So look at the chart. This chart is just horrendous. Like, you'd have to, unless you're a long-term, like, you know, you have to remember that I am a long-term swing trader, long-term, medium-term swing trader. And I do a little bit of trading as well. Okay. But I do have long-term positions, but I've had these positions for a long time and I'm not looking to really sell. Probably going to hold it for a long period of time. And if anything, I bought them even lower from where they're trading at today, even after this pullback, right? So ServiceNow, I originally bought this back here in 2023, I believe, before it made its massive run at $113. And I rolled this sucker. I rode this thing all the way up here, and I rolled it all the way back down, and I rode it back all the way up, right? And I ended up selling around here. And I've said it more than a few times on the channel. I sold it right around here, right? I didn't know this was going to happen, but I saw a lot of upside in other companies during this time. This is when I was buying Zeta. This is when I was buying On Semiconductor. This is when I was buying a lot of semiconductor stocks, right? And they are up a lot since then, besides Zeta. But I've made more money in those than I would have lost if I held on to it, right? So there was upside. You got to weigh the asymmetric upside. You got to weigh the risk and reward here, right? So ServiceNow, if I bring up the fiscal AI for ServiceNow, oops, I wasn't even sharing my screen when I did that one. I mean, I was just showing the screen of for a minute of ServiceNow. But I'm going to bring up the fiscal AI real quick. We're going to go over some ServiceNow financials, and I'll just take a look at some fundamentals. I mean, this stuff is available. There are so many people talking about ServiceNow on X that it's like you don't really need to dig that deep in order to recover, in order to find information about ServiceNow that can make you bullish. You just need to prove to yourself that you're confident the stock's going to go back up, right? And for me, the chart has to be one of them. The chart is not one of them over here. But if I go to ServiceNow, there's a few things that I like to check off when I want to be bullish of stock, right? Is revenue accelerating? It is. Revenue has been accelerating around 20% or more. And in fact, they reaccelerated from March 2025, which is good to see. Gross profit is at 76%. So those gross profit margins are really good. Operating income, they are profitable from an operating income perspective, which is always really good to see. They're sitting at about, last quarter they weren't. They had some sort of single write-down or whatever it was. But they're still, I think last 12 months is probably a good one over here to kind of get the idea of it. The operating margin is still at 13%, which is really good for a software company, right? Net income is they are profitable from a profitability perspective of net profit margins, right? So that goes good to see. Now let's take a look at their metrics. Their metrics for subscription revenue is growing at 21%, right? So this is tangible revenue that was already billed to the client, but it's based upon a contract that they sign, and based on this annual contractual value, they are growing at 21%. They have North America, they have EMEA, they have Asia Pacific. So these three regions that they have business in, obviously their largest region is North America, but they're doing pretty well in there. That's going about 20%. Their largest business geography region is 20% growth. All right. Non-current remaining performance obligations. This is a forward-looking indicator as far as how the company's going to be doing in the future. 27% growth, 26% growth on total RPO, right? Current RPO is 25%. So their revenue is going to grow, right? So that's always good. We take a look at, they don't report this anymore, but number of customers with ACV, which is annual contract value, over $1 million. So customers with contracts on an annual basis over $1 million. They have over 2,100 clients, right? So the average ACV over is about $5 million, right? So this was a year ago, so it probably changed since then, but they don't report these metrics. Let's take a look at the valuation. They trade. They have buybacks, okay? So they're buying back about 1% of their stock every single year as of last quarter. EV to sales on a forward basis or on a TTM basis is 12, right? So that's actually pretty good considering that there's other companies out there that trade at a lot higher than that and they're not as profitable, right? So what was the PE? You can't really look at PE because it is software stock, but price to operating cash flow is at 29%. I'm sorry, 29 times, which is good to see. Let's look at the forward valuation because you do get that forward valuation for software stocks. Forward price to operating cash flow is at 11, which is no, that's for 2029. Next 12 months is 17. Free cash flow is 19. Forward EV sales is 6, right? So this thing was like way higher before. Okay, so when it was here, it was 18 times, which is very expensive. Now it's at 6, right? So you're getting it significantly cheaper. Again, I do not own ServiceNow. I don't plan to buy ServiceNow. So you don't expect me to be buying software stocks until we get some sort of bottom in this software sell-off, which doesn't look like it's stopping anytime soon. But even when it does, it'll probably consolidate and then make its decision from there. I want to be there after it makes its confirmation back to the upside. I'm not in VG anymore. I don't have that. Yeah. All right. So I'll just show you on the chart again. Okay. So I bought all the way back in 2023 around this area. I was accumulating. Okay. And I even added more around here. And I rode this thing all the way up here and rode it all the way back down and then rode it back all the way up here. And I sold it right over here. All right. Super lucky that I sold it around here. All right. So I can send you receipts if you want that one for my savvy trader. But yeah, I sold it over there. And it was a decent sized position. I would have gotten the socks kicked out of me if I held on to it, but I didn't. And like I was saying, I ended up buying semiconductor stocks when I sold it. So those have been doing pretty well. We are getting 30 minutes away from the market close here. The Qs went red again. Amazon, oh my goodness. Amazon better not go red. That would really suck. Bitcoin's pulling back. Yeah, Sina's back up here. A few people were asking me about Sina. This is a stock talk one. I like to do my own research before I get into a company. So I did my research of this one, and it did seem like it did present itself like an opportunity. I do still own it. I'm not selling right now. But the chart is not on a short-term basis, not looking that great. But if you look at the weekly basis, right? So it did, from a technical perspective, it did reject the 200-week moving average, right? Rejected pretty hard, but since then it's probably to come back. Like, see these candles that come up here, they pull back. They come up here, they pull back. Like, it always comes up, tests whatever significant moving average is, pulls back, and then comes back to retest it. And it did it with this one, and you see these wicks over here, so it probably told you that it was not going to continue strength to the upside, and then it pulled back, right? So you got to be careful with these when you're going to buy, right? A lot of people were buying here because they were super excited about their earnings, because everyone, them and their friends and their mothers were buying it, so they want to get in on it because of FOMO, and then they got slapped in the face, and they're just like, why is the stock down? Well, I mean, if you're buying up here, you're going to be a little confused, right? So you got to kind of, if you're convicted about this position, then you wouldn't really care about this. You'd be pretty excited about it, but you would keep an eye over here at the 100-week, which is all the way down to $75. On the monthly chart, this monthly chart looks pretty good, right? So you're back above the 20-month, you're back above the 200-month. It's possible that this bullishness continues. We'll get the 100-week. I'm sorry, the 50-week will be able to revert back and stay above the 100-week. That would be pretty bullish. 100-month. Yeah, we'll see. I mean, it could be a bull trap, could be, but the whole market's a bull trap. If that's a bull trap, like if this stock pulls back to $75, that would likely mean that semiconductor is going to pull back. And to be honest, dog, semiconductor is what's holding up the Qs right now, right? Like, it's NVIDIA, it's all these semiconductor stocks, right? They're holding up the Qs right now. Software is not holding up the stock market right now. Software is getting decimated. Oh, this thing changed. Oh, wow. Why was the thing there? It's supposed to be up here. All right. I see you trading. I see you trading view. Yeah. So, I mean, the VIX is down today, which is good to see, but this VIX is in an uptrend, right? So, I would like to wait and see what's going to happen versus like going all in anything. I have like around 10% cash. I think more like 76% cash, to be completely honest. And I'm confused. I don't know where this market is going, and I don't want to trade it because it's like you're going to get chopped up, right? I mean, like just the moves that you're seeing today is pretty crazy. So we got to kind of wait and see what's going to happen here. I don't have any thoughts on OSS. I know they're all in. I was supposed to be researching this one, but I didn't get a chance to. I ended up putting my time to ACLS, so I got into that one. Yeah, I'm originally from New York City. I grew up there. All right, so I think that's about it. I wanted to go over ACLS before I end the show and the earnings that we have this week. So let's see over here. All right, so this week we have Palo Alto reporting today. We have Cadence. All right, so Cybersecurity. Cadence is a competitor to, what's the name of that? Synopsys. So they do more of the automation software for building semiconductors. Devon Energy is reporting earnings today. So it's seeing oil up. It might be pretty good for them. Toll Brothers, luxury home builder, is reporting earnings today. No thoughts about that one. Trash company, Republic Services, reporting earnings today. Axcelis, like I mentioned earlier, is reporting earnings today. I'll go over that in a second. But yeah, I mean, like a lot of companies I don't really pay attention to are reporting earnings today. Tomorrow, you do have another semiconductor company reporting tomorrow morning, Analog Devices. Wingstop, SolarEdge, so another solar company. Occidental Petroleum is reporting earnings after close tomorrow. CVNA is reporting after close tomorrow. Figma is reporting earnings after close tomorrow. I don't imagine those earnings are going to be too good or anything. Klarna is reporting on Thursday before open. Lemonade's reporting earnings Thursday before open. I am out of Lemonade. I did get out of Lemonade at $75, trading at $64. Not bad. Let's see if we see that $100 range again. Not planning to buy this one. I already got a 3 times from it, so I'm okay for now. OpenAI reports earnings on Thursday after close. We'll see what happens with that one. Texas Roadhouse after hours. Indie Semiconductor and Onto Semiconductor Onto Innovation are reporting earnings on Thursday after close. Those are semiconductor companies. Akamai is reporting earnings after closing Thursday, so we got more of the cloud in there. AXTI is reporting earnings. I think that's really it as far as a lot of tech goes. Friday morning, not really anything that I know of. DNow, I think it said ServiceNow for a minute. CMDB. All right. So I think it's about it. Oh, Hive reported earnings this morning. What are they trading at? Maybe that's the reason why a lot of these data center stuff is down. Let's take a look at the charts again. See where the data center stuff is trading at. Yeah, it is a hell house here in the data center space. Hive is down 4%. I mean, this is I'm not a fan of this one, but I would never buy this one. I don't have a conviction with it, so I'm not going to buy it. CoreWeave is down about 5%. Core Scientific is down about 2%. Howard Marks, Oak Tree Capital actually did buy some Core Scientific last quarter. They would actually, I don't know, unless they bought it here, maybe they'll be up a little bit in their position. Nebius is down 1%. Iron is down 2.3%. I am out of Iron. All right, so I don't want to hear it, guys. I'm out of Iron. I got out at around $45. Is what it is, right? I already have a sizable position in Nebius. SP 500 is dumping? Not really. Not really. I don't think it's dumping. I mean, it's certainly down where it was an hour ago, but no, it's not dumping. So the market's in a little bit of wait and see. Amazon better not go red here. That would suck. That would be its longest losing streak ever. It is its longest losing streak ever, but if it does, then that would be a new record. Let's see how to that one. NVIDIA is at 187, so since then that's pulled back. Yep, so we will see. All right, so Axcelis. Perhaps I need a drink of water. 1 second. Wow, that's all the way at 96.66. Let's go. It's gonna be closing at the high of day. Man, I've been long this thing since this inflection point right here. I love that setup, and I've told you guys on here many times I'm long Axcelis. Was long on Semiconductor. Let's see if I can do that again. Let's see if that can happen again. Sina is above 85, so that's a lot better. But yeah, all of these like high growth names are just getting decimated today. Like there's just no stoppage in sight. All right, so Axcelis. I want to share this beautiful article or this beautiful post that my man Nicholas did share. Oh, hold on. Maybe he texted me. Oh. I'm actually going to send him a message, see if he wants to join me while I explain or maybe he wants to explain it himself. All right, cool. So I'm going to invite him right now. He's going to join me. And let's see. There you go. All right, so Nicholas is a cool dude, young dude, actually. I'm a fan of seeing the young crowd getting into stocks and not buying like penny stocks or your meme stocks or whatever, but actually doing the due diligence and research out there and buying heavy where the conviction is. Especially Nicholas, he's actually been a buyer of Micron as well as some of the memory stocks when they were trading at much cheaper valuations. Actually, the valuation is still pretty cheap today, but he was buying in the $100 range. So this is Nicholas. Welcome, sir. How are you today?
Hey, Sam. How you doing? Good to see you.
Good to see you. Good to see you. I'm going to throw your Twitter on here, but I was just about to pull up the post you just sent me earlier. Why can't I find it? Yeah, so pretty exciting day. We do have Axcelis reporting after us today. And the price action, I would say, it's actually pretty
bullish. Yeah, it's pretty bullish
price action.
Yeah.
So why don't you go ahead and explain this? I'll leave this on here for people to take a look at it and also leave the post there. So why don't you go ahead and explain your bull case for Axcelis?
Yeah, sure. So I was looking through a lot of the memory companies on my page. I do a lot of memory research, and I was trying to find the third degree picks and shovels plays. And I noticed that ACLS really hasn't ran compared to a lot of the other companies in the sector, mostly because they do a really niche product, which is ion implantation, which is basically whenever these memory companies are making these huge sheets of silicon wafers, they inject electrons into them with ions, and that's how they conduct electricity, which is what ACLS does. But I noticed that their suppliers include SK Hynix, Samsung, TSM, and they haven't really been given a premium compared to the rest of the market. And they're a direct competitor of AMAT, and in their logistics logic sector, I think it was, they beat by a pretty decent margin, and EPS was through the roof. So I feel like it's a great play for it.
Yeah, understood. Yeah, no, I agree with that. You were mentioning that they have about 30 to 40% market share of ion implantation. So what people need to know with ACLS or ACLS and Applied Materials is that Applied Materials, they have a broader range of semiconductors or specifically machinery and equipment that they build for in this entire industry. But one of the segments that they do build for is basically ion implantation for NAND technology, right? Sorry, DRAM technology. And that would be Micron. It would also be for TSM and Samsung and so on. But that's what they cater to. Now, this isn't their whole business, but Axcelis is more of a pure play in ion implantation. And the bull case for this, as Nick was saying, was that not only from a valuation perspective, that Axcelis is trading at a much more attractive valuation than Applied Materials, but also the clients that they have are all telling you, like, look, we are behind in supply and we are going to ramp up tremendously through 2030. You've heard it from Jensen Huang, you've heard it from Micron CEO, you heard it from Samsung, SK Hynix, and all these companies. And this isn't the NAND technology segment. This is DRAM segment. So this is the one that really is the crux of building high bandwidth memory for all of these chips that are coming out, Blackwell, Vera Rubin, MI455s, and so on. So the valuation is attractive, and the market hasn't necessarily priced in their ramp up in revenue growth. This quarter, they are actually forecasted to not even accelerate this quarter. They're forecast to have minus 15% revenue growth. So let me actually bring up this.
Yeah, I just posted the guidance that they're gonna issue and the growth that they're projecting, and it's like down 10% EPS sequentially, and then the guidance they're right there. EPS of 215 million for this quarter, and then next quarter they're still guiding for decreasing revenue. But I think the story is just inflecting now. And if you pull up my last post, I put in a quote from the last earnings call, and they were saying that they have here, scroll down. Yeah, when we talk about our customers right now, it's clear that the demand is coming from DRAM and HBM. I'll just skip through, but the important part. But obviously, we care about wafer starts for NAND, not whether you build taller and taller skyscrapers, as I mentioned. I do think it's an exciting sector that could be a turning in the cycle, and it's a bright spot for us when that happens. And that's happening now with SK Hynix increasing fabs per month, Samsung, etc. So,
yeah, I mean, it could be a spectacular show for Axcelis if they do reaccelerate. So I've already told you the same thing happened for On Semiconductor when I bought On Semiconductor, was that they actually bottomed in terms of deceleration for their last quarter. And since then, they're already guiding for 10 to 12% growth in next year. But right now, they're growing at negative growth, right? So when you have that inflection point, it's like the market needs to re-rate itself for the stock to go higher because the analysts need to raise their estimates again, right? So if you look at, if I'm going to bring up Fiscal AI, if I bring up the, let's see, this is the revenue on an annual basis. I'll just do this one. All right. So for this year, they're looking at $815 million for the mean revenue estimate. For next year, it's going to be 866. So they're going to accelerate next year. See this? They've been declining, right? So you have this like inflection point over here where it actually starts accelerating. And when that happens, that's when Wall Street needs to change its estimates to the upside to kind of meet what they're going to be guiding for. The guidance is going to be super important, this one, because I don't think this quarter's numbers are going to be super important. Maybe it'll show like that's flatlining in terms of its decrease in growth. But if that accelerates, they guide for a better quarter, which according to analysts, they will be, right? that's bullish for the stock. And if we look at these revisions, they've been revisioning down, but lately they've been revisioning up, right? So that's always good news to see. And this is the reason why you saw the stock re-rate a little bit higher since it had bottom.
Yeah, but if they can just even show any flatlining for this coming quarter, anything at all, I think the stock will do well because of that.
Oh yeah. So the stock basically bottomed here in April, where the whole market bottomed, but essentially it kind of has not revisited the lows from November. So a lot of stocks are actually lower than they were last November, but this one is considerably higher. So this one is sitting here up about 30% from its low in November, and still trades at about 3.5 times sales, right? So even their balance sheet and all that stuff, like it isn't even like what you'd see in like a lot of stocks that are getting sold off today, where they're still trading expensive valuation. If I look over here on Axcelis, Seeking Alpha,
I saw 22 times earnings, 45% gross margins, and a fifth of their market cap in cash. So
right, yeah. So that like you mentioned before, $500 million. Enterprise value is 2.5. So the market cap is about $3 billion, and like you said, 20%, near 20%, probably more like 18% of their market cap is in cash, right? And very little debt.
Yeah.
And like I also said, 3 times trailing price to sales, 3 times forward price to sales. Okay, and they are a profitable company, right? So their gross profit margins, which is similar to Applied Materials. Applied Materials is closer to 50%. Axcelis is around 45%. And they are profitable from an operating income perspective at 60% gross margins, and net income margins at 60%, right? So this isn't like a non-profitable company, but it's also not a company that's growing at like double-digit percentages, right? You're probably not going to get that for Axcelis. But the point is to not be invested in companies all the time that are growing at triple digits. The point is to buy companies that are misvalued, where they have asymmetric upside risk reward, right? So 22 times TTM, and then let's look at Applied Materials. They're 36 times, right?
Yeah.
So that would mean that even if Axcelis doubles, it would be priced very similar to Applied Materials. Now, much different than Applied Materials, but arguably still a much more attractive valuation of buying Applied Materials here.
Yeah. I think I could argue that valuation should be even higher if they're a key manufacturer in that supply chain, and given all of the fabs that they're trying to build, that multiple should probably be even higher, I'd argue.
I agree. I mean, they are the pure play there. So
yeah. Good stuff.
Yeah, man. I'm coming to give you thanks a lot, man. Yeah, I think Amit's going to be doing the stream soon, probably right now. But I usually end around here anyway. But appreciate you coming on, Nick.
Yes, sir.
I'm sharing your Twitter on here. Everyone go follow him.
Yeah.
It's a lot of good research. Yeah, I was telling him that you bought Micron pretty early. You still holding Micron?
Yeah, I'm still riding Micron. I think it's still cheap. I don't think it's cyclical. I think that's just the main thing with all these companies, is that it's not cyclical. Unfortunately or fortunately, whatever way you want to look at it. It's
I know. Cyclical. I mean, even though their TTM price to earnings is 39, their forward is 12. And it keeps going down every time they report. And you know what? Same thing with SanDisk. Even though SanDisk isn't DRAM, they are more the NAND space or the storage controller space.
Yeah,
the forward gap is 15 times. It's not.
The cool part with SanDisk is that all those companies are moving towards DRAM. So Micron, SK Hynix, and Samsung are ramping DRAM. So they've reported that they're going to cut NAND, which gives an opportunity for SanDisk, even if it's lower margin.
Exactly. I mean, that probably explains the reason why Pure Storage isn't doing nearly as well. I mean, it is doing pretty good year to date, I think. So I'm going to go to the chart year to date. Yeah, it's still up 8% year to date, so it's doing pretty well. But Pure Storage doesn't even design these NAND. They design the arrays that they buy a bunch of storage. They buy a bunch of storage NAND memories on there, and they basically have all the long-term memory stored on there for quick throughput, right? So it's a bit different from something like the designers like Micron or SanDisk. But yeah, definitely. Micron is not an expensive stock, and people look at the chart, they're just like, oh, that's really it. But I mean, it's pretty bullish to buy charts that are going up, not charts that are going down. So
and they report earnings in a month still, so it's not like this is going to be over for a couple months. It's coming soon.
That's true, man. Appreciate you coming on.
Thanks, Sam, for having me. Appreciate
no problem, dude. Thanks for everyone that was watching the stream. I'm not going to be streaming the Axcelis earnings.
I think I might do a Spaces or a stream. I'm
Okay.
kind of thinking about it, but I might do that. Yeah.
I'm probably going to be in the stocks and spaces though, so I don't think I'll be able to come on.
Yeah. All good.
Yeah, man. Everyone give Nicholas a follow. Cool dude. Met him at AMAT's meetup in Jersey. Are you going to the one in LA?
I'm not. I'm in school right now,
Okay.
so I can't. I look, you might be able to. I'll think about it.
Okay, that'd be cool to have you there. I'm probably going to go to that one too.
Yeah.
I live in LA, so it's a lot easier.
Oh, that's easy. Yeah.